Scotty Byrne.
Goodness, how you've done a whole week juggling all of this. This is the third day and I'm absolutely beat down. So, yeah, I don't know how you managed it.
You are a superstar. I have to say, it has been an adventure. Wouldn't have done it without Scotty. This morning, woke up to unfulfilled Uber again. I thought, you know what? I'm going to march to the to the bus stop. Bus stop had all the buses delayed. And I walked to the station. I did. I walked to the station. I feel a bit fitter for it. Thank you. My heart felt like it was going to burst. But that's another matter. I got on the train. I managed to get on
That is epic.
the train. How was your journey in?
Well, I mean, I feel in comparison to what some of the journeys that people have had, mine is relatively straightforward because it's just one train to Liverpool Street and then walk across. But it's actually been really busy all week. I mean, my train was packed this morning. And that's the 6:10 or whatever it is. Absolutely packed. But yeah, Liverpool Street, I think they've got a partial service on the tubes running. But again, teeming with people. So yeah, I think it's been a tough week. It's been a tough week for people having to travel in. I'm just being told by Jugger my volume is low.
Good morning, Jugger. Good morning,
okay.
Boise. Good morning, Monkey Man as well. Are you in the downward dog position? He does yoga whilst he's listening to us.
Impressive.
And I don't know how you trade at the same time, but you know, that's another story altogether.
It's all that Zen focus though, isn't it?
Then, yeah. We're going to have Issar, speaking of Zen, up with us at 8 o'clock to talk about loads of stuff to do with Zen and trading psychology, as well as join Scotty on the Open. R. Sachs, good morning. I have a special R. Sachs is very interested in defense as well.
Excellent.
Otherwise
well, there's
known
a lot, as we know, there's a lot to talk about there because you've been very busy this week outside of organising people, filling in guests, purchasing greenery and everything else. So, yeah.
Gavin, Friar, good morning to you as well. And Steve, CDR. Right, let's quickly get our viewers across the coming up. If we may, do we have a chart for that? We'll just talk them through the coming up because we've had obviously lots of discussions over who's going to be in. I had a plan A, plan B, plan C, and possibly plan D as well. That's Andrew the sock puppets. So coming up, we got Issar, as I said.
Yep.
And then we got Garth Mackenzie as well to talk us through all things markets and crypto. So if you're into Bitcoin, Ethereum, Solana, do join us for that. And also we've got that special interview with Pulsar Helium.
Brilliant.
A bit later.
Look forward to that. That's going to be really good. That is going to be really good.
Right. Overnight. Let's go to overnight action, shall we?
Yeah, let's see what's been going on.
Let's do that. Hey, welcome back to overnight action. So what caught your eye, Scotty Byrne?
I think for me yesterday, the market has been, the US market has just been struggling to really have any impulse. So the last few days we've had one or two indecisions on the charts that we kind of highlighted on Tuesday as well. Doesn't really look like it was going to push on. But then yesterday, an inline or kind of flat month-on-month weekly jobless, and then a flat CPI, the month-on-month was slightly up. The market just reacted in a pretty wild way, to be quite honest with you. You know, another new high, but the breadth has picked up for the first time in a while, which is quite interesting. I'm going to keep talking when I just bring that up. But yeah, I think it was interesting to see things like the Russell up 1.5%, the equal weight S&P up 1.5% yesterday. So that to me was quite interesting. So let's just bring that up. So you can see here, sorry it's a slightly messy four screener, but basically we've got the 50-day and the 20-day breadth on the left-hand side, the 200 down the right, and then the put-call ratio on the bottom right. I mean, you can see that's a pretty significant jump, having trended lower. Whether that pushes on today on a Friday where you've made another high where there's not a lot of data around, I don't know. But into next week's Fed meeting, which we can obviously speak about on Monday anyway, but there's going to be a press conference, there's going to be dot plot forecasts as well. That to me I didn't think the numbers were going to be that great, but on an ironically softer jobs number, the market took off. So yeah, for me overnight, that's been the real feature.
And also, interestingly enough, there's been a huge silence, I have to say, huge amount of silence over geopolitics, considering what's happened this week. I find that more peculiar than anything else because, you know, we have this rising expectation of a cut from the Fed, right?
Yeah.
Gavin Ackers and I were talking about this on the show. We had a poll. Many of our viewers still in the 25 basis point cut camp, but Gavin and I kind of felt, 50 might not be too far of a stretch. Where do you sit, Squashy?
I would be, as I was chatting about this with Axel on Monday when we were looking at markets, and I think 50 would be seen as a little reckless, but again, I mean, I don't know let's go to our friends at Polymarket and just see if there's much of a change in the expectations of that. But yeah, while we're just bringing that up, I think that
whilst you bring that up, look at the US 500. We are starting to see a bit of plateauing. This is the daily chart here. Also on a Friday, just be aware there might be a bit of profit taking. Volume certainly early on looking quite low there. Also crossing over to the forex markets as well. US dollar basket still pretty much flat there, so it's looking a bit like a wait and see until we get to the Fed. But as I said, that's
what surprised me with that jump yesterday. That was a proper jump yesterday when, as you say, 4 working days away from the Fed meeting. But yeah, I mean, look, if we go to Polymarket, we've still only got 11% betting on a 50 plus bips decrease. So yeah, I think the difficulty for Powell is, and we have touched upon this already, where he was criticised at raising rates too slowly in COVID because he was so focused on the jobs data. Is he going to be, it's a reactive human function to not want to be accused of the same thing more than once. So I can see why, or where some people are arguing for 50 basis points. Again, I don't think anything merits it looking at where asset prices are.
Yeah, and consumer prices as well, rising more than expected, right?
That's correct,
that's also, not, giving any of that sort of support, that call for 50. But there is this still 7% chance of a deeper 50%.
Yeah, I don't think the market would like that. I think that would have the opposite effect that...
something's wrong.
Well,
right?
This is it.
Beep,
this is absolutely it. Especially as well, anecdotally, as we were discussing as well the other day, how Fed cuts normally precipitate a market sell-off. Or they certainly have anecdotally in the past. I think 50 bips would be pretty tough to justify when you look at his stance since about March of wait and see. So yeah, the data is not really suggesting it needs 50 apart from the jobs number, but I guess we'll see. That's why he's in a big chair and we're in discussing it without the pressure of those decision making.
Yeah, and without any summons as well to kiss the ring. I've been hearing loads of chief executives around the country in the US being summoned in the coming months, and they are all in strategic sectors. So now that Trump has met with all the usual suspects in the tech space, he's moving down into commodities and rare earths and things like helium, for example.
Why do you think he's doing that? What makes you...
To ensure that they know, the line of command, yes? So that when the orders come down, everyone knows what to do. Much like Angeline's plan A, plan B, plan C for strike
absolutely.
week.
Yeah, absolutely, yeah.
This week. Let's just quickly remind our viewers as well of what happened overnight. Micron Technology, of course, one of the big movers in the previous session. This is after Citigroup. This is 5-minute chart here I'm showing you of Micron. Look at that move there, jumping more than 7%. Wow. Citigroup raising its price target on the memory chip maker to $175 from 150. Of course, it's now 151. And then Warner Brothers Discovery. Were you watching that yesterday?
No, I'm not a big watcher of that, to be fair.
So Warner Brothers usually are really sort of dull, not really
that's what I
talked
mean.
about.
It's not. Yeah, I just never.
Yeah.
Never looked at it.
I have to say, at the risk of showing my age, I still have a T-shirt of Warner Brothers and Turner and CNN all meshed into one, and it was all left on our desks when we got to work. And we were also given, share options in all those companies. And
wow.
all of us kind of like banged our heads on the table going, they know we work in finance, right? And they know that, these options, and we're looking at the share price, and it's sunk below now. So it's not very attractive. But anyway, back to Warner Brothers. It surged 29%. This is on a report that Paramount Skydance is looking at a majority cash bid for this embattled company. So just showing you the daily chart, just show you the significance of that move. And I always say, look left. We're now at levels not seen since August 2022. And if you go further out as well, going to the weekly chart, friends, here, and also the monthly chart, you can just see, what a move that was.
It's a serious move, isn't it?
Yeah.
And the streaming platforms, I mean, again, where you look at I'm sure like most people nowadays, smart TVs are very affordable. So when you go to your apps menu, all those providers, there's got to be a bit of consolidation there. And you can see a lot of the cross-selling now. If you go into Amazon Prime, you start getting Apple TV streams on there. So, you can see the direction that's going. But speaking of looking left, actually, I did think this is one we haven't spoken about for a little while. Tesla.
Breakout and touch me.
Well, yeah, because when you think we haven't, it's what, a month since we spoke about him since numbers?
Yeah.
And it just goes to show silence is golden, right? When he doesn't say too much.
Up, Musk.
Basically,
Shut up.
When he doesn't make too many pronouncements and quietly gets on with, I guess, his day job, which he might be getting paid $1 trillion for. So I guess that will probably draw the focus in. But yeah, look at that. I mean, as I say, we love to look left, and rightly you've highlighted just the top of that candle there, and look at
that breakout, people. Look at that breakout. I did tell you that was an area of interest. This is a daily chart.
Yeah.
And for technicians, it's all about the the move, the breakouts that we're waiting for. I did say that there was a lot of upward momentum there. We're seeing the untangling of the moving averages, and it was starting to show that rainbow formation, which we like to see with the price action sitting on top. And there we go. We had that breakout.
Lovely.
A lot of chatter overnight as well amongst the trading hub and the investment hub here at IG internally. But also I saw quite a few on the Twitter sphere yesterday. I mean, they got a huge following. So as I was going to bed, lots of that coming through on my mobile phone, pinging away. Pelican, good morning to you. Pelican saying, can you look at Open Door, please? Let's have a look. We can indeed. Open Door Technologies. Here we are. Look at that move higher. Mo is a big fan of Open Door Technologies. Is this one that you're familiar with?
I'm pleading ignorance on this one. You're going to have to enlighten me on this.
So Open Door is one of those companies that allows lots of different companies to sort of gain insight on their data, and also they have clients like Shopify, and they've got a new CEO, of course, from Shopify as well. And Open Door, his name is, I can't say his surname, Najatian. I hope I'm saying that right, Kaz Najatian. They bring him on board to try and triple the share price of the real estate tech company. And the thing that is interesting about the stock is, unlike Mo, who is very brave, Pelican is Mo. Mo is Pelican. I like to stick with areas that I am au fait with. I have steered clear of this because I'm not so au fait with this sector. It has very good momentum, and Pelican is a true momentum investor and trader. So he also looks for these signals and volume and moving averages that, you know, how we see a consistent uptrend, because don't fight the trend, right?
Yeah, I mean, look, that's a great chart, right? I mean, irrespective of if we understand the business, you can certainly see why it attracts as well if you're a momentum trader.
Yeah. And here comes Ange's but.
But
I am also aware that Open Door has been described by some as a meme stock. And so it tends to also get powered by a lot of enthusiasm, shall we say. So
I would guess it probably belongs in the cluster of stocks that you could bracket that under. But I mean, that's a pretty steady grind upwards. I think that's perhaps a little harsh, although again, because it's suddenly started picking up, which is if you look left, if we draw back and look a bit further left, it's just not been doing a great deal for a long time. So there is a sudden explosion higher in it. So yeah, interesting.
Maybe Pelican can tell us as well, because I don't quite understand. And I'm a bit like Warren Buffett. If I don't understand it, don't touch it. So the Open Door has this tech, and it's a bit like We Buy Any Car, or is it Car Supermarket? I've used one of those where you kind of like, I need to get rid of the car, get me the best price, use your algos, you know, and they look at numbers from auctions the week before and the previous week, depending on what model you're selling. So then they give you cash straight away. So Open Door has this technology that uses AI as well, and it tries to simplify the home selling process so that they offer instant cash offers on homes, you know, through its platforms. I don't quite know. I mean, like, I'd love to know whether they can navigate.
I've seen this now and again when you get these adverts. Yeah, I've never really.
Yeah, I don't know how they would navigate the UK housing market because it's so different, like from one road to the next.
Yeah, I did. And again, the speed of completion. I did see a very quick thing about the UK housing market in the Times yesterday, about the speed of conveyancing and how it's got like 30% slower every year for the past 5 years.
Yeah.
So yeah, I mean, I'm in the process of selling a property at the moment, and it's just painful.
Yeah.
It's just absolutely painful. Anyway.
Yeah. So Pelican, if you can enlighten us as to how they do this, I would love to know, because I don't quite. And also, apparently, they deal with all the conveyancing. They can, and super fast. All of this, they've gone through this process, know that it's not fast.
Yeah.
In this country, how would it deal with gazumping? That's what I want to know.
Yeah.
Speaking of which, loads also out today. Of course, we are also counting down to some more B-list data, but you know, who knows? It might prove to be, given how markets are on this slow melt up still, that maybe this data might provide some sort of a move. We don't know. US consumer sentiment, of course, that is the UMISH. Expected to show that US consumer sentiment is softened slightly in September.
Yeah, I think the 1 year, 5 year expectations number might be good, but since Powell basically said that survey data is out the window back at the March Fed, he's just been so fixated. It's actually had, I mean, that used to be a real mover, especially on a Friday, that Michigan sentiment stuff. But that's definitely eroded a bit since Powell said, as I say, back in March, that this is just not the kind of survey data that we look at, which I'm sure the University of Michigan is very upset about, with the compilation people doing all that work. But yeah, that's a little more. That's a little more frustrating. Also, as well, we got some more IPOs today. I know that you were watching Klarna the last couple of days, because that was very exciting. We can touch upon that as well. But Gemini, the crypto exchange owned by the famous Winklevoss twins, that floats today. There's a couple of other smaller ones, so that might be a bit interesting as well. But I haven't been looking that closely
20 times
at Klarna since floating.
With Gemini, apparently 20 times oversubscribed.
Yeah.
That is according to finance magnates, but it'll be interesting to see the kind of appetite for this crypto exchange given we have this burgeoning or starting crypto wave again. Those of you that are watching this space, the expectation for Solana, your XRPs, your altcoins, Bitcoin and Ethereum as well, is that with the coming Fed cut, that's going to provide more liquidity into the market. And all that means for those that watch the crypto market is that it lifts crypto because the money has to find somewhere to kind of...
it will look for a home.
Yeah, look for a home. That's right.
In fact, as Rich likes to say on the Art of Investing podcast with his two market gurus, the competition for capital. Andrew, that's, I feel your pain. I feel your pain. That is...
See, Andrew, Andrew's like hit it on the head, like to tell me what anyone that said
the
that
sooner it gets onto blockchain,
that it's not a fast process. So how will Open Door, for example, be able to navigate places where it's not a fast process and there's gazumping?
Absolutely.
Right. Who grabbed BAE yesterday? Let's have a look. BAE. Here we are. Look at that go.
Well, talking about BAE, surely that's a wonderful segue into, apart from your regular day job of markets, charting, interviewing, making multiple plans, you've also been at XL this week, haven't you?
I have been at XL. I am heading back there today because for those of you that watch the space, it is a 4-day event. It happens only once every 2 years.
Oh, okay.
I am going to show you some pictures. Terence has got them already. Let's see if we can bring them up. So that's the Anjural Pavilion near to where...
Is that a submarine model or?
It's kind of like an unmanned sub. I think that was what they were.
Like a drone sub.
What they were trying to explain to me. But it has the capability as well, obviously, for them to build out one that's got loads of capabilities to have people as well. That's H003. If you move on to the next picture, but of course, I was looking for it. I think at that point, Maturin was online with me, and I was like, I need to find Palantir just to see how big their stand was, and it was indeed much bigger than previous years.
What happens when you share samples?
So
you
Palantir,
out a bit more on the stand.
Yeah, they are the eyes behind defense technology and also the combat capability sequencing of the plan A, plan B, plan C. So you can use their technology to kind of simulate what kind of outcomes, what to deploy. So yes, okay. So Palantir had a huge stand there, much bigger than previous years. Can you see the number of people? Let's see if we can go to the next screen as well. The number of people there, General Dynamics, of course, that where the tank zone is, and they were out in force. The reason I'm talking about the 50,000 people, and I was there on day 2, and today is day 4. Day 2, it was so crazy. Restaurants are running out of food. It felt like a concert atmosphere. I could not, at some places, I could not actually see the carpet, which is a huge difference from 4 years ago, from 2 years ago. Let's go to the next picture. That's the land pavilion. And I went there specifically to be at the AI defense panel. But what was also interesting is the number of outfits there, including BAE Systems, by the way, which had a huge number of drones on display.
Right.
So clearly that's been a big thing this year. So drone technology and also anti-drone technology and combat solutions that are able to navigate what they call future workforce.
Got you.
Several questions, Scotty, that I put to the heads of different stands there. RSACs, you'd like to hear this because we have this theory that there's going to be increasing spend in Europe. However, what I found out was quite surprising.
What was that?
Well, the fact of the matter is a lot of the spend is already allocated. Number one. Number two. They don't quite know why. They think it's somewhere in admin, but the spend that's been allocated don't seem to be getting to the boots on the ground. And certainly the case here in the United Kingdom. That is the overarching mood music. Number 3, the consensus is perhaps the boost that that has seen happened earlier this year already. And maybe now the growth is in other areas like Indo-Pacific, perhaps. We do know that Han ETF and some other outfits are launching defense ETFs and funds that are looking at other regions. That could be why. But also the interesting thing is that there was a lot of talk around capabilities surrounding response, surprisingly, from the NHS. Whether or not the NHS are ready. We had similar music in France as well. Are systems that support, for example, our health system ready to cope with something that is unexpected?
Yeah.
That was surprising too, because I didn't expect that the mood music to be surrounding that. I thought the mood music would be around Article 4, Article 5, because of the drone strike earlier this week, right? But no one seemed to be talking about that. Everyone seemed to be talking about capabilities. Interestingly enough, I caught up with some fund managers and also the words tactical deterrence. We're invested in tactical deterrence. Some of them even saying that you need defense in sustainability. So we'll leave
to take on board,
we'll leave you to take that on board, because right now we've got guess the chart. Now if we got new music. We got new music.
So good.
Here we are. So guess the chart. Is it UK or US? It's the US. Wow.
It's a repeat of yesterday?
Yeah, because
nobody got it?
Yeah.
We're doing that, are we?
We're doing that. Right. No pressure, people.
Heads down, everyone. Come on, it's Friday. TGIF, last push. Let's
get this chart. Come on. Let's get this chart. Here we go.
The chart, she whispers. But does she tell the truth?
Step by step, I trace your line. A flicker red, a candle fine. You lead me up, you pull me down. You wear a bull's face, then turn around. Guess the chart, mi amor. Is it pain or is it profit I'm dancing for? With every tick I lose control. Your side raised glance devours my soul. Producer Phil plays coy. He shrugs while Rich is hedging all his plugs. But Ange, she sees, she knows the game. She whispered short, then lit the flame. A wick, a gap, a silent fall, a fib retracement, or none at all. The RSI is on the brink, but I can't move. I dare not blink. Guess the chart, mi amor. Is it pain or is it profit I'm dancing for? With every tick I lose control. Your side raised glance devours my soul. Guess the chart, take the lead. It's love or ruin in every feed. No safety net.
Hey guys, we are back for the opening bell. Hamish has saved us with I loved how the music this time started slowly, but then builded to almost like something out of a Tarantino movie. I thought very dramatic for a Friday.
It was very dramatic
for a Friday.
I wanted us to come back in the yellow jumpsuits.
Ah, yes, that's right. Maybe, or the black suits with the black ties and white shirts. Right. Anyway, 5 seconds to go till the peak of the day.
Boise saying, hey, so here we go, and we are off. It's looking a bit quiet there, cautious, but to the upside for Germany and also for the FTSE. Let's quickly have a look at the FTSE. There's some still in autumn, but we have taking a look at and zooming in. Scotty, any of those pop out at you?
Fresnillo again. Well, as silver's already been mentioned pre-open, Fresnillo's definitely riding that horse higher. The miners, not surprisingly, pretty strong with rate cuts being a bit of a tailwind for commods. Home builders as well, Beasley, Barrett's, Rightmove. So in spite of the snail-like conveyancing process in the UK and the very much lack of an open door type company, UK real estate as well.
Here we are. I kid you not, I'm just going to swap over. I kid you not, I have been out of pocket by 1,000 before by conveyancing because the vendor, the person I was trying to buy from, jumped out of his back window to avoid the fact that he was pulling out after he'd said he would sell. So there you have got quite a few.
He literally jumped
out the window, and the estate agent and I stood outside watching it, going, no idea what's just happened, but that doesn't look good.
Yeah, extraordinary.
Yeah.
Extraordinary.
And so we just had to cut our losses, or cut my losses, and move on to the next property that we were going to buy. Here, downside, BP down 1% there. And also Shell, so a bit of softness there for the oil majors.
No surprise there, I guess. Then the pretty Rolls-Royce, I mean, that's not really a moving Rolls-Royce, but interesting to see it back above 11 quid after a little dip below, which is good. Yeah, it's quite a mixed bag, really, isn't it? There's not, it's pretty, you're really kind of scraping to find any real underperformers there, aren't you, in those outside of the energy names and a couple of other defensive things like Staples and the pharma names.
I wonder if it's all being tempered by the weaker than expected industrial and manufacturing production that came out of the UK July month-on-month GDP data this morning. That was slightly offset by services and construction. Of course, ECB also left rates unchanged. But let's have a look over at Germany, the Germans, jugga. Yeah, here we go. So here are the winners first.
Yeah, again, that's another little cyclical push, really, for the most part, isn't it? Infineon, Siemens, Rheinmetall, Heidelberg's, Brenntag. That's that other push higher again. Rheinmetall, I know that's pretty well held, and that's a favourite for some of our viewers too, and rightly so. But I was actually looking at the indices. And the DAX has very quietly drifted to about 1 month lows. It's really not showing that same impulse as it had, as we were talking about front end allocation of some of the defence spend. Maybe just for now that tailwind of defence spend has perhaps petered out a bit, because the DAX was an absolute joy to trade for the first 6-8 months of this year, but that's kind of slowed down a little.
It has,
which is interesting. And after the ECB yesterday, I think Lagarde spent most of her speech focusing on the support they can give to the bond market if France were to cause consternation amongst other investors. There's obviously been some selling of French bonds, so Lagarde was more concerned about protecting the bond market, and they've pretty much signalled that rates are stuck at 2%. So some of those tailwinds perhaps petering out a little bit.
Do you know what I found most interesting about Lagarde's speech? The fact that she, I think, implied that inflation indicators are consistent with the bank's target. I mean, this all plays into the whole, is 3% or 4% the new normal?
Yeah, I mean, she has done well. There was a stage not so long ago, every time she opened her mouth, the market used to collapse, the opposite of the Draghi effect, where every time he used to speak, it used to go up. So, that's certainly got
That's a bit unfair, though, because Draghi just droned on until everyone went to sleep.
No, that's true. That's true. But unfortunately, you're judged by the market performance when you open your mouth. So as a politician or central banker, you are judged by market performance, as we are. And a little bit of cyclical weakness. Airbus, Porsche, Adidas, Volkswagen. Again, just a little off the top in those autos names. They're probably, as we were talking, in a bit of a range, as you were discussing with Ronnie the other day on the show, just about where the auto market is in Germany.
Right, moving on to France very quickly, because I know Pulsar is about to come on and we don't want to take his precious time. Yeah, chomping at the bit. ST Micro, Thales up more than 1% there. Bouygues as well, up almost 1%. Any of those you like?
No, it's to see Bouygues, it always used to remind me of a colleague of mine in New York who used to torture himself trying to pronounce that in various different ways apart from the correct one. So yeah, I do feel sorry for him. But yeah, again, look, largely cyclical, banks up, industrials up. That's pretty much mapping across from that US move yesterday, as we were talking about factor trading that algos like to do from the open. There isn't really anything there that's making me think that shouldn't be there. Stellantis again for cars, a little bit of that weakness, energy weakness. It's predictably dull and tracking each other, which on a day like today, after a week we've had, probably not a shock.
Yeah, probably not a shocker at all. We are going to have Issa coming on, so stay right there. Keep the volume up because Issa's back with us for fast markets and, of course, a bit of trading psychologies too.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey guys, welcome back again. Thanks for your patience. Issa and I are doing fast markets. We've already been discussing.
You already chatted, yeah, I was
some of the
screwed.
brain-mangling aspects of the market currently. So we'll touch upon again, much like the section with Elliot as well the other day, where some of what we talk about will hopefully trigger a few questions.
Yeah, and I think a lot of it.
Yes, so feel free to chime in with anything, because that was great the other day actually, how to bounce off the questions. I appreciate it's Friday, everyone's quite fatigued.
Well, I was going to say, the other thing is it's quite nice because a lot of what we're going to talk about feeds directly into next week.
Yes.
I think so. I guess we were talking before the break ended about yesterday. And I think yesterday was a kind of crazy macro day in terms of like data reports. So we had slightly hot CPI data, and we had kind of cooler than expected job numbers. And the market seems to just be a bit confused by it all, and seems to actually just be kind of gently continuing its march upwards, or in some cases not even that gently.
It felt a little bit like me, whereby sometimes having sat and run positions in the past, where you wait for a piece of data, you suddenly decide this is a watershed moment. Because everyone says it is.
Every CPI report is the most important CPI
Exactly,
report.
everyone is most important since the last one and until the next one.
Yeah.
And so it was almost like people just sat there and said, unless this is absolutely blowout either way and creates
just
real volatility,
business as usual,
I'm just
right?
going to hit the return key and send orders into the market, because that, as we've already mentioned on the show this morning, the breadth, the jump in breadth and that performance of the equal weight S&P.
It's kind of nuts.
And the Russell, where jobs numbers are coming down.
Well, exactly. And I think we're in this kind of bad news is good news, at least from a jobs market perspective, which is also a bit confusing, in part because we've had some quite bad jobs numbers between the claims data yesterday, the kind of jobs data last week. We had the massive 900,000 downward revision to jobs. And so I think what you're tending to see is that actually maybe the labour market's a bit weaker than we expected. It's not radically weaker. And so I think if we were to see like extremely concerning numbers, then I think the market would respond a bit differently, but they're all a bit softer than we expect. A lot of the revisions tend to be in one direction.
I can only imagine if at one of these, surveys, or particularly in non-farms, if you get a negative number.
I think that's where that will be, I think, a bit of a crystallizing.
Yeah, I was listening to a piece the other day where I think it was quoting Neil Kashkari saying the kind of number they like to see is about 75,000 a month.
Yeah,
So
that's I think
replacement.
what his like replacement rate.
Yeah,
is, right?
exactly, his replacement rate. Thank you. Yeah, so 22,000 as a one-off.
Yeah.
It's
a bit
just,
soft.
it's soft, but it's just a case of.
Yeah.
And look, I think it's clear that Powell does focus on jobs,
For sure.
as we saw in COVID, and as we already mentioned, the criticism of him.
Because if anything, he was too focused on jobs.
Too focused on jobs, but that's clearly his whole angle, because it gets the variation of inflation, and they still don't know the real tariff impact. But with everything that's coming through, like the PPI data the other day, that was.
I mean, that was cold. It was PPI this week was like extraordinarily
that's
cold.
generally one that people ignore.
Yeah, well, but last month's PPI was super hot. So we're kind of coming off this quite noisy signal, and part of it is because businesses are trying to respond to tariffs. A lot of those tariff news have been kind of a bit, I saw an economist describe it as like the hokey pokey, where it's like a bit in, a bit out.
Yeah.
You shake it all about.
Oh, and I just think in general, as we say, I mean, look, we're obsessed with looking at trends.
Yeah.
I mean, if you drew a line of averages, if you had a number of all the data, and things like the City Surprise Index, and the Atlanta data is actually looking pretty good.
It is positive, yeah. And so I think we're just in a slightly odd position, right? People don't really know what to read, and I think you're getting quite noisy short-term data. And so while people are trying to absorb all of that, plus understand what's going on, I think there is just a gentle upward bias in the market, and I think that's quite as much as I'm sometimes quite bearish, I think that's quite a rational response to what we're seeing so far, because we're likely to see kind of gently easing rates, at least in the US. The US is like relatively stable, I guess, compared to like France or somewhere like the UK, where growth is like very
for
stagnant.
some of this money, as we were talking about money flows, as we know, those are king.
Like, where's it going to go, right? Yeah.
Is it going to go back into the US? Well, speaking of rates and jobs, we've just been asked a couple of questions. I realise this is just a fraction away from the US, which is probably a bit of a welcome break for people, because we've been asked to take a look at Crest Nicholson,
nice.
The home builder. So let's just bring that up.
Yeah, let's pop them on the screen.
Yeah, let's just get them up. Okay, so Yes, a double, arguably a triple bottom. Wow. Just looking at that there, but those are. I think the problem is for things like house builders and rates.
Yeah.
I think you could just see that's really interesting.
Do you know what kind of regions they specialize in, or are they like fully cross country? Because we're seeing some quite interesting like regional differences in the housing.
Yeah, I must admit, I've lost my thread on, because I know Barclay Group's mainly southeast higher end. I think Crest seem to be, so they're building. When I see adverts for Crest, they're building new developments in places like Cambridge. Right. So probably they seem to go for the more higher growth areas. Mm-hmm. I think
very biotech and kind of AI focused.
Yeah, they're trying to look where the pins on the map are going to experience a bit of growth, I think. And so, yeah, I mean, again, it's certainly formed a double bottom, but this is a little bit like when Andrew was talking about Lulu on Monday to Mr. Wheeler, where just because it's behaving like this
doesn't necessarily mean.
No, I don't think it's necessarily a signal. I mean, it's so far from its moving averages. Yeah. I mean, look, that's not to say that it's not a tradable stock. It clearly is. But if you just look at this as sort of a soccer match, and on my screens the yellow is basically a red candle and the blue is a green candle. If you take from, say, August, it looks as if the sellers are winning the football match about 15-2 at the moment. So yeah, it's certainly formed a base, a little like sterling that's holding in.
UK I think a lot of the macro data for the UK is a bit confusing for like home builders, right?
Again,
because you've got you've got no growth as of this morning, but at the same time you've got potentially rates coming down. One of the big concerns with rates coming down in the UK is like the UK housing market has been basically frozen in place because no one wanted to sell. Yeah. And so as rates start to come down, you might actually see inventory go way up and the market kind of unfreeze. And that actually might be quite bad for home builders because the stock of kind of new homes relative to kind of existing homes on the market might shift a little bit towards those existing homes.
That's very true, yeah. Yeah, that's very true. You say most people want to move from an existing housing stock for a particular reason. It could be downsizing, schools, all the normal reasons that you move, but they're not necessarily rushing out and spend their hard-earned savings on a new property to
unless they have like a good reason, right?
Unless they have a very good reason, yeah, absolutely. So yeah, thank you for flagging that. That's a good one to look at. I haven't looked at. I mean, let's as a comparison then, for argument's sake, look at something like a Barclay Group very quickly. Yeah. Helps if I actually spell it properly, because otherwise my machine's not going to know what I'm going on about. So yeah, Barclay Group, yeah, again, a bigger gap down in the summer on that pricing shock, but they're not in terms of the shape that they're making.
It's not quite as...
They're troughing, but it's look, it's one to watch, but again, at the moment, unless, and as we were talking earlier on this week, maybe with the changes again on the political front, Starmer...
Well, he wants to build Blairite, right?
Well, and you know, Starmer looking to bring Blairites into the front bench, more of the pro-growth rhetoric.
I mean, next week we're supposed to have all of these tech companies come with Trump to the UK and declare about growth things.
Yeah, well, I did see there's a data centre that's getting open. So yeah, I mean, again, I think with the expected reaction function around a visit from the president, especially with what's going on at the moment, the media is going to be taken up with that, unfortunately. Yeah. But yeah, I think definitely make sure you check the business press and not social media just to see what things are getting inked.
Yeah, 100%.
What we should be looking at.
And I think there have been some reshuffles actually, even in like who the ministers are in the Starmer government. And one of the things that has been relatively stable actually is the degree to which they're quite bullish housing and they want to kind of clear out some of the planning reform. So I think this is one of those like long running themes that really impacts the kind of house building kind of segment quite a lot. And I think if we do manage to kind of clamp down on a lot of those planning reforms, I think that will be really bullish for the sector.
Yes, absolutely. I mean, having a few friends who work in that space, the lack of skilled labour.
It's crazy, right? Yeah.
Again, is a problem.
It's huge.
This is the argument that I've always had about the size of the internal market and flexibility of the US. If you're a carpenter in Idaho and there's loads of work in Florida, you just kind of throw your stuff in a U-Haul.
Yeah, it's not too bad, right, to me.
No, that's right. And unfortunately, the actual labour and the exterior outlook, perhaps, that's getting projected by the UK is not of, hey, come work here,
come work, right?
Pay more tax, and especially if you're from another country, you're going to get made to feel really welcome, you know. Yeah. So, yeah, that's certainly not helping.
Yeah. Do you? It's funny you mentioned Lulu. Do you know this like running bet that Ange and I have about Lulu and
No,
Nike? So now,
I don't.
4 months ago, Ange and I had a bet where we basically did opposite sides of a pairs trade. And the pairs trade was Nike versus Lululemon. Today I'm wearing some Nike trainers. I am bullish Nike relative to Lulu. She's very bullish Lulu relative to Nike. And I think it's been like an interesting one to watch, because I think there's such a weird demographic balance happening in the US, and where consumers are choosing to spend their money is like being quite radically shifting. And I think you can see some of these stocks like Lulu, which were priced quite richly, like at the height of their valuations, I think starting to come down. And now, honestly, I look at Lulu and it looks pretty beaten up.
Yeah, I mean, it needs a proper
Yeah.
reshift. Although, again, a little like Nike. I mean, I remember Rich months ago saying about Nike and the and things like On Running and those other brands. I mean, things are salvageable and they're still a brand, but they seem to be at the moment. For instance, one of the kind of interest groups that I know from it is my daughter and her friends. They just like the brand, they like the whole kind of shtick. But 17-year-olds don't really drive your bottom line in
That's
margin.
probably true. Yeah,
They
you
wait.
want the 20 kind of 6-year-old have income segment.
Yeah,
right?
who work on Wall Street,
Yeah,
who like to
yeah.
come in yoga gear,
Yeah,
which was
exactly.
their whole demographic. And so interestingly for Nike, then you're talking about some of the shifts for consumers and so on. What's been really kind of striking you about that shift compared to say a year ago?
So I think there's a couple of things. I think number one, I think they had lost touch with the running segment, and that was a segment that actually drove.
Really, that's interesting.
Yeah, and that had really driven a lot of the brand strength. And I think if you look actually in general at the kind of high performance sports segment, like they weren't doing quite as well in basketball, they weren't sponsoring as many athletes in things like athletics. And so I think Nike had kind of shifted to a leisure brand more than a high performance sports brand. And then they were getting kind of eaten by, exactly like you say, players like On, who are then trying to appeal to that running segment. You've got specialist players who try and kind of appeal to different sports communities. And so I think like that's painful. And then on the other side, you have people like New Balance, who, while they had quite a big running segment, also pushed very hard in the leisure segment. And so Nike was kind of getting eaten from both sides. And they brought back some of the old management. They're doing some kind of changes in how their business works. I think it's, in my view, quite a like back to basic strategy. But actually, that's quite appealing.
I guess with the Olympics,
it's a huge opportunity, right?
Coming as well, then that's all of a sudden now's the time to pivot.
Yeah, and I think also now is the time where you can see a lot of these players taking quite big swings. So if you look very simply at like the Adidas Liverpool deal, where Adidas are like fully sponsoring Liverpool Football Club, and Liverpool have re-released their shirts this year and have sold more shirts than they've ever sold before. In fact, the Liverpool shirt sales from Adidas kind of sponsored kit is more than the total they've net spent on players this transfer window, which is mad, right?
I mean, that is actually, you know what, so I'm not a big football guy, but I do identify Liverpool and Adidas really closely, because at the times in the 80s and the late 90s, they had their success. They
well, exactly.
Adidas.
I think Adidas being like really tied to the brand. I think the other brand that Adidas has been tied to over the summer at least has been Oasis. And I don't know if you went to an Oasis gig.
There were. I would love to have gone, but
I went for one of the gigs. And I was like delighted to get tickets, but like I went and it was just packed full of Adidas gear. Like people wearing Adidas hats. It was like fully like the 90s vibe, right?
Proper nostalgia.
Yeah. And like it felt very clear to me that like, oh wow, I think Nike just isn't in the zeitgeist at the moment. And I think to rebuild that credibility, they really do have to put in some of the basic work.
Yeah, it's got to go back to sports, isn't it?
Right, exactly. Yeah, and I think it's high performance sports that I think really sets the culture for that world. And I just think that they had been really lacking in that space.
Yeah, I completely agree. Right, Pelican with those wonderful pink high five hands to get our attention. That is a very good use of the icons there in YouTube. Quite a strange set of icons in YouTube, but there you go. I guess they've got their reasons.
They also look at Robinhood, right?
Yeah, absolutely. Yeah. So Robinhood. So yes, we've.
Wow.
So yeah, look, now this has been accepted. I mean, look, some people who like Robinhood as a platform, now they've been accepted into the S&P 500. Might see them as a sellout, and they don't want to trade.
It's
Robinhood
not their fault. Their market cap is.
I know. But that's how the meme crowd, I guess, move. I mean, again, look, a great performance, as Ange likes to say, with her rainbow her rainbow methodology again. That's almost a perfect move higher. So yeah, much as you'll see on these index inclusion names, I mean, if you trade this as a momentum play, as an earnings play, anything like that, you probably want to avoid it for the next week.
Yeah, it's just a bit noisy, right? And
it's far too noisy, because what will happen is now, from when they were included, I think the inclusion announcement came several days ago, hence the pop higher.
Yeah.
What you will now have is a lot of the banks and funds out there are calculating
when to rebalance.
Exactly, when to rebalance, should we go early and how and so on. So that's why you're seeing that really weird price action. So I think you almost need to suspend your trading in this, because you can get caught out, particularly on the day.
And there are like specialist shops that only trade index inclusions, right?
Oh, no, absolutely.
It's crazy sophisticated.
Yeah, I mean, some of our teams at Credit Suisse, all they do, they literally have maths doctorates in just to do the forecasting of these stocks. And they'll be trading something like that. I think because of the questions around Robinhood, and it's failed a couple of times, it's probably been less clear. But you might have had some people who've had this position since June.
And just knowing,
for an index inclusion.
Yeah.
So I would certainly be really careful there. Just trying to trade that from a visual basis and what the price action does, because you can get caught out.
Yeah.
And open interest in options trading start coming back in October. I mean, I don't think it ever really goes away. Pelican, you might remember when we had Elliot on earlier on in the week, the usage of options has more than doubled in the last several years.
And the days to expiry of those options is also
0 days to expiry, So things like open interest, the difficulties as well when you look on platforms to get real open interest for options is really difficult and very expensive, because a lot of it is done OTC. So for instance, there'll be a lot of the big banks out there will have effectively synthetic options in single stocks, in sectors, in bespoke indices, in regular indices. There's so much going on outside of what you see on the screen.
And the netting of those positions is super complex.
Exactly, the netting of those. So yeah, it's more, of course, on the IG platform, you got the tasty functionality that will show a reflection of open interest, but it can often be far in excess of what you've got, but it's still a reasonable
I think it's a good
reasonable
proxy,
guide.
right? And as that open interest number goes up, it is typically true.
Yeah, of course, it will move in step.
Yeah,
it will move in step, but it's generally the amplitude of that. That's why a lot of the volumes you'll see, especially next Friday, for instance, I like to tell people, and if you remember as well, single stock options expire at the close next week and indices at the open, so you're going to get potentially some pretty wild moves.
Those days are always kind of slightly crazy, where you have the different timings of I've had some very interesting days doing that in some of my old jobs. It's some very long days. It was responsible for rebalance and expiry was responsible for me once working a 20-hour day, but that was like a long time ago. Systems were in their infancy, but all those old stories, all those old war stories of the market, no one cares about. But it was interesting. Yeah, look, Nike unchanged year to date. But honestly, unchanged for a company that was on not a great run.
Behaving like an absolute dog, as
it's actually maybe okay, especially when you compare it to someone like that.
Well, if you've got Ange in the pair, so the pair trade you've got with Ange, is there any kind of settlement price at the end of the year?
So it's
like a nice lunch or something?
So if she wins, I have to buy her a gilet from Lululemon, and if I win, she's buying me a pair of Nike Air Maxes.
Wow.
So
I
we'll
mean,
see.
if the price cutting from Lulu keeps going on, that's going to be
that might be okay. When we started, I was like looking quite scarily at the price.
Yeah, that's going to be very asymmetric in your favour. I would guess. I don't want to jinx it. It's only September. A lot can happen between now and the end of the year. But yes, as some of the questions are coming through for Garth as well, because I know on a Friday he'll be coming out with some very interesting stuff. Back to Europe, actually, if we can just touch upon that. Let me just reduce my screen.
Doing the review of France's credit rating, which I think will be an interesting.
That's right. I mean, again, I guess most of the damage has been done for, say, sentiment purposes, I would imagine.
Yeah, the sentiment is pretty bad.
But again, I mean,
French yields were in and around the level of Italian yields. They haven't quite got worse, but like it's not far off. And I think the debt positions are definitely getting a lot of scrutiny. Yeah,
I think this is a function of Europe, which frustrates people about the position that they're in, where they can just sort of arbitrarily say it's okay, it's fine, we'll back it with support mechanisms.
It's all just German backed, right? Really?
Well, yeah, exactly. Yeah, as long as Germany. But yeah, Europe is actually kind of circling the airport as regards a market. You know, for the stimulus they've had, and as Ange mentioned a little while ago about the defence show that she was at yesterday, and forward spending being brought in. I mean, if we just have, let me just bring up a quick look at the DAX futures just to show you a bit of an example. You know, they've not been doing a massive amount in the last while. They're in fact back to relative lows. Has that asset allocation, again, as we talked about, money flows, where that goes to?
Yeah.
Potentially, I just think that
they're just going to go to the US, or
again, US potentially. Again, I think that
I think some emerging markets as well have been
some emerging markets. Again, not maybe necessarily China, perhaps, but things like Hong Kong, because you're seeing now some of the tech names in Hong Kong are really starting to get on the AI train.
Yeah, I mean, like Alibaba's had an amazing run, right?
Phenomenal, right?
Yeah, it's
absolutely
mad.
phenomenal. So yeah, you can see the relative difference in those charts there. And then,
yeah, wow, look at that. Is that the Hong Kong index?
That's the Hong Kong 50, which is a bit of a cheat.
Yeah.
Unfortunately, there's
still,
so many Hong Kong indices you could look at, and you have to explain which each one is. So your Hong Kong 50 back to recent highs. I mean, if you contrast that with
look at that March though; it's so consistent.
Yeah, I know. If you I'm trying to get the Shanghai comp, but this is one thing that is not great on TradingView. So Shanghai comp as well, despite the overhang of debt, despite the lack of stimulus, that's just getting dragged up by that regional money. So that probably tells you, if we look at the Kospi as well, again, very tech heavy. Index. I mean, look at that. That's
wow. So I guess the question is, where is the money coming from? And it's probably coming from,
I would guess it's probably out of Europe right now. And again, look, if you've been able to move your money around fairly nimbly, you've had a great 6 months in Europe, which has been a massive underperformer.
Well, I think the word of the year probably is rotation, which is like we just keep seeing different.
I mean, what a year for that.
Yeah,
it's been incredible. Again, I don't know how some of the really big global funds manage that rotation because of the nature of their flight to passive indices. And then probably just one more market to look at as well is the Nikkei. So all the concerns about debt,
FX,
and 30-year bond. Again, it's just, I mean, look at that. That's just crazy. Kept going. In spite of the
do you mind putting up the yen, because I think that also tells us.
Yeah, we can certainly have a look at that very quickly, and then we'll probably make that our last thing to look at for the day. So the yen.
Dollar yen,
That's kind of been holding in okay, but again, that's been propped up with the weaker dollar, I guess.
Yeah, for sure. But you can see it almost like start to get tighter and tighter in.
Well, it's when, as you, I mean, as you absolutely say, if I had the time for drawing a couple of sloping lines, you'd see that wedge is getting quite tight.
So I wonder if there'll be a bit of a move.
A bit of a breaker, yeah. I mean, look, me personally, last thing to mention, I think once the Fed actually cuts next week, I can see the dollar rallying a bit because it's such a consensus short.
Well, I think they're going to cut 25 bips, and
that's right.
Anyone's pricing 50 is,
I mean,
a little bit crazy.
If they cut 50, I might have to go and hide in my spare room.
But the thing we'll get to see is the SEP. So if Stephen Moran gets in, then you'll be able to see where is his dot versus the other dots.
No, I completely agree. Right, so I'm being told that unless there's any last questions, any last points you feel compelled to bring up, that we're going to take a quick break, and then you're going to get a treat with Garth Mackenzie on a Friday.
Nice.
Speaks to Ange about lots of different markets and his take on what's going on.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Welcome to the Art.
Hey, welcome to Expert Edge. And we are very, very lucky indeed to have Garth Mackenzie, technical analyst at Traders Corners, with us, because Garth, you were meant to be in today, weren't you? And I was really worried that we wouldn't be able to get you in the end, but we thank goodness for dial-ins.
Well, absolutely, yeah. So I mean, I'm not in London. I'm in Guildford, a little bit outside of London. So I need to catch the train in and the tubes. And as everybody knows, this week is just an absolute disaster in terms of trains and tubes in London. So here I am in my office at home talking to you remotely. So thank goodness for Teams, and that's what we're on. And maybe next time, if they've sorted out the trains and buses and everything else, I'll be in studio with you.
Let me tell you why you shouldn't feel bad. So let's, if we can, Terence, whack up the pictures of the front of the office yesterday after I unplugged from home because I could not get an Uber for love nor money, and trains and buses up the creek. It looks like a Hitchcock movie, doesn't it, Garth?
Well, it does. I mean, you sent that picture to me on WhatsApp, and I had a good chuckle. You know, I forwarded that to a few friends of mine, and I said, how did people get around London before bicycles? And the answer, of course, is on trains. Yeah, Lime bikes must have done a roaring trade in London this week, with everybody needing to get around. And as you can see there, I mean, people that I've spoken to just said actually they couldn't even find a Lime bike because they were so popular that all the bikes were used. It's unbelievable.
Yeah. Any of you working for Lime Bike, please tell them that they prevented Ange from getting into the office for the CEO of Pulsar Helium. I had to pick my way through, but I managed to do it. And we've got the Pulsar Helium CEO a bit later, so stay tuned for that because it's a fascinating company. Speaking of fascinating, let's start with the markets, because you know we've got almost like a hint of double trouble out there, Garth. We've got this, 1-2 punch of slowing economic growth and rising prices as well. We've also got this, real interesting move at the moment. Markets seem to be creeping higher in September, which is seasonally meant to be the worst month for stocks.
Yeah. Well, it is seasonally usually the worst month for stocks historically. But as I've said on the show before, these seasonal patterns are not a roadmap. They're history. And that these patterns don't always follow, and it seems this year so far it's not following. But what I must also just point out is that if you zoom in on the month of September and then break it down into its actual sort of segments of the month, it's usually the latter half of September that is actually a bit weaker. So we're kind of in the middle of the month now. So there still is the possibility that we could follow that seasonal pattern of a little bit of weakness in late September. And I do wonder if after next week's Federal Reserve rate cut, which is now almost 100% guaranteed, we're going to get a 25 basis point rate cut. Do we see the potential that there's a little bit of a buy the rumor, sell the fact type of scenario after that happens? And I've seen some of the big investment banks talking to that. I think it was JP Morgan earlier in the week who came out with a note saying, beware that you might find a little bit of by the rumor, sell the fact after the Fed cuts rates. I don't know. Let's see. But the point to come back to it is that from a seasonal perspective, it's actually usually the latter half of September
the last
that is
2
a bit
weeks.
weaker. So we've still got to see how that works out. We're on the 12th of September now. We're in the second half of the month from next week.
Garth, I'm going to be devil's advocate there. We had Julian Wheeler from Shard Capital on, one of our very loyal viewers and also our core guest here at Trade Live with IG. His view is we had that correction back in April. What are your thoughts on that?
Well, that's it. He may be right. We did have that big correction. That was obviously driven by tariffs and the concern around tariffs. But that was very quickly fixed up. And, well, as we know, the markets continue to roar up to new highs. And I think that the pain trade is up at the moment. You can just see it. And that those who are short this market are really, really suffering. And it's an unfortunate part of the nature of markets is they tend to push to the point of maximum pain. And maybe we haven't got there yet. And that maximum pain still needs to come out. So and with that being the case, and with this momentum just continuing and gradually grinding higher without really any volatility to speak of, because vols are really low.
But they don't care at all. It's almost like vols indicating that markets do not care.
Yeah, well, that's it. I mean, your VIX is Wall Street spear gauge, and it's showing that there's no fear whatsoever. It's complacent, and there you see it. I mean, look at that VIX. It's sitting around, if you were to zoom out even further, I mean, we're sitting around 2-year lows on the VIX index, or close to 2-year lows. So there's a lot of complacency around it. The markets seem very, very comfortable. And I guess it's also it's a liquidity story. There's a lot of liquidity around, and liquidity is what drives prices ultimately at a very high level. And there is still lots of liquidity, and all of these asset markets are moving higher. And it's not just equities. We're seeing it in the bond market as well now. Bond prices moving higher in the US. Cryptos are coming alive again, starting to buzz. So you're getting across the board, actually, it's a pretty strong environment with everything going up at this point in time.
Yeah. Money looking for a home. We'll get to crypto in just a moment because we've got loads of questions there. Let's go through the dollar first. Let's talk about cable because, of course, we've got a lot of interest here, given now that we have that date for the budget as well. There's much consternation over why it was happening so late. But all the mood music I've heard surrounding cable is further downward pressure to come for sterling. What's your view on that? So you're looking at perhaps a punch through some key levels. I mean, we are getting quite close. I'm just going to mark this up so that our friends here can have a look. But we are now very close to that key level last seen in the middle of August, and that's the 136 level, and that was also last seen 24th of July as well. A lot of interest at this level from a technical perspective.
Absolutely. I like your chart that you put on there, because that's 100% how I would have drawn that line as well. So that 136 level, as you can see, is a key zone of resistance for sterling, for cable. So a punch above there would be bullish for sterling, actually, and it would probably send it up to 138, which was the previous high from earlier in the year. The question is, will any breakout there follow through, or would it be a false break? And we won't know that until after the fact. So with these sort of things, I always look at it and think, well, you've got to respect the break unless it fails. We haven't had that break yet, but it's looking increasingly like it wants to have a go at 136. And I mean, this pains me to say it a little bit, actually, because I've got some options on cable looking for it to move lower. I've got a put spread, a 135, 130 put spread on cable. So for me personally, I'd love to see it going lower. And for all the fundamental reasons that you alluded to, I think it could go lower. But at the same time, you've always got to look at the price action and say, well, what is the price doing? Because that's the only truth in the market at the time. And right now, this price does seem to be wanting to nudge a little bit higher. And to my point about market moving to the point of maximum pain, unfortunately, it looks like it's probably going to try and make a break through that 136, because that's where the pain trade would be. But it's also a dollar story. And the dollar's been very weak. And the US dollar index itself had been hugging the 50-day moving average for the last month or two. But it's recently just started to turn down below the 50-day moving average over the last couple of sessions, and looks like it could be headed back to the prior lows. But, and I saw your previous interview on while I was waiting to come on air, and they were talking about the potential that dollar goes stronger after the Fed cuts rates next week. And again, in a sort of a relief type of move. There's a lot of short interest in the dollar. And the thing is, when it's very crowded like that, you can sometimes get these situations where you get a snapback in the opposite direction, or a squeeze. So if you did get a US dollar short squeeze, then maybe then that 136 level on cable holds and it actually does turn lower. But I don't know. We'll see. In the fullness of time, we'll know. But to wrap it up, to sum this part of the conversation up, I guess 136 is a key level to be watching on cable right now, and there's a lot of interest around that level, as you can see on the chart that you've put up there.
Brilliant. Now, I know we've got loads of questions coming through on crypto, so we'll move swiftly to that. But first, I just want to double check with you, which camp are you in when you say, breakthrough? Are you a one close above that level? Some people are, two closes above that level. Which camp are you in?
Well, I'm in the one close above. And the reason I say that is because often when you get a big level like that, it punches through very hard, and you'll find a whole lot of stops get triggered. And so if you're waiting for two closes above, well, then you might find that by the time you want to put your trade on, it's already moved up to 137 or something. And by then it's a long way away from the breakout. And if you're going to put a trade on, then suddenly your risk to reward ratio is not great, because you're now chasing the price higher. So for that reason, I tend to act when a break happens, and then just know that if the break turns out to be false, well, then you have to have your risk management sharp and execute a stop loss if the break happens to fail. And that's the way I trade it. I just think if you wait too long to try and chase a break, often you end up missing the meat of the move anyway, which is not really what you want as a trader. You want to try and get in at with the best execution possible.
I like that, the meat of the move. Jugga asking, Garth, can you talk us through strategy and Bitcoin within the next up to 6 months, please?
Okay, well, look, I think if you can bring up a shorter term chart of Bitcoin, I'll just show you what I'm thinking in the short term. The break above $113,000 is bullish. Let me just see what you've got there. Okay, is this a daily chart? So if you just hover over 113,000 there with the lateral support line or resistance line, there we go. That's it. So there's actually a small little, yeah, there we go. That's about right, how you had it. There's a small little inverse head and shoulders pattern that's evident there that's been validated on the break above 113,000. So that in itself is short-term bullish, and it should open a move back up to test 120,000 again, which is around about the recent highs. We actually went a little bit above 120 last month, but call it 120,000 for there and thereabouts. I think that's the next near-term target. And then if we can break out beyond 120,000 on a more sustainable basis, that would then be bullish for new highs, probably to 135,000 is a bigger picture target that I've had for quite some time. So I'd have that as my view. And I think just in terms of going back to the short term, I mentioned this 113,000 level. Now that should be a support zone. Because we've broken above that as minor resistance in the short term. And now you'd want to see the price holding above that level. And whilst price is above 113,000, to me, we're now, in the clear to move higher. And that's the area, to me, that's the critical level. We've got to hold that now. If we fail to hold 113,000, then obviously I'd have to reassess my thinking. But for the time being, we've made a break above 113. It looks good. We're above those moving averages again. And it looks to me like the path of least resistance now is to the upside for Bitcoin.
Gotcha. And just to be clear for our friends listening in or watching us on their commute, when you say fail to hold above that, do you mean one daily close below the 113,000 level?
Yeah, a convincing daily close back under 113,000 would worry me. And the thinking goes that when you have a break like this, if the break is valid, then you should find that there's naturally a flow of buyers chasing that break. Natural buyers, as well as short covering. And collectively, that should mean a wave of buying that takes the price higher. And it becomes self-perpetuating. If that doesn't happen, then you have to ask yourself why. Why would it fail? And the only reason it would fail would be because sellers are stronger than buyers. And in that case, you've got to say to yourself, all right, well, if that's the dynamic, the sellers are stronger, do I want to be long? Maybe not. That's the kind of thinking that I apply to it from a dynamic of understanding the flow between buyers and sellers in the market. And it's why false breaks are often quite meaningful, because when you get a false break, it means that everybody's on the wrong side of the trade, and it tends to move aggressively in the opposite direction to what the false break was.
Gavin Ackers chiming in whilst we are on Bitcoin. Gavin's wanting the monthly view on this, wanting us to look at the monthly view. Could you look at the bull flag consistency, Garth? Would you look at 140,000 as the next realistic move? This is the monthly chart here.
Yeah, he's right. And you can see a number of sort of flag type of patterns on that chart, and we're busy forming one at the moment. And they've all resolved to the upside. So I think that's probably fair. I mean, I said 135,000, but 140, it's there and thereabouts at the upside. And I would think that those targets, be it 135,000, be it 140,000, those sort of areas would be valid for a bull flag breakout of the current bull flag that we're busy forming at the moment. In terms of targets, and levels, it was not always easy to pinpoint an exact target. I think you can have your target in mind, but what you also probably need to do is have some sort of a methodology that keeps you in the trade up to the target, but also gets you out if the target fails to meet. And to that extent, I like to look at shorter term moving averages on the daily charts, for example, as a read to keep me on the right side of the momentum, but also to use those as a trailing stop loss in the event that a move maybe falls short of your target level. Or on the other hand, that maybe the price goes beyond your target and you're actually able to stay with the trade and run it further. Now, they always say you should cut your losers quickly, but run your winners. Give your winners room to breathe. It's easier said than done, but if you have some sort of methodology like a moving average that keeps you in the trade, as long as you're on the correct side of that moving average, it allows you to run a winner. In my experience, I've had often cases where you actually end up making more money by running a winner that just continues to run and run, utilizing some sort of a trailing stop methodology above a shorter term moving average. It's knowing when to sell is the hardest part of trading. That's in my experience. That's the hardest part. I find getting good entries I can do, executing stop losses I can do in my sleep, but knowing the right time to sell is the hardest thing to get right in trading.
And also, never looking back. I find, if you take profit and you look back and you kind of go, oh, I should have stayed a bit longer. Hindsight's a wonderful thing, right? Hindsight's a wonderful thing. You can't call a top. Anyone that can tell you that they can call a top, well, they're fibbing. Speaking of which, I'm showing you the. I love this job. This is why I love it, because I thought when I left school I wouldn't be able to, merge my drawing skills anymore. But actually, I have been doing a bit of drawing whilst we've been talking to illustrate the bull flag that was helpfully mentioned by Gavin. So Gavin Ackers, thank you for testing my flag drawing skills there. But there you go, just to illustrate what Gavin, hopefully that is what you were talking about, Gavin. Please let me know if I've got it terribly wrong. More questions coming through. We've also got someone asking you to look at strategy, as it's called now, and also Ethereum.
Yeah, well, let's talk about Ethereum first. I'm long Ethereum after it's held a lovely lateral support area at $4,300. It's been testing that over the last month and a bit and held perfectly. And now we are starting to break out above $4,500 for Ethereum this morning, which is also bullish. I think you've got a longer term chart there. If we go into something more short term, like a daily chart.
There we are.
Yeah, there we go. So there we are. That's your daily chart. So you can see all those lows over the last couple of weeks come in at around about 4,300, and we've been holding that very nicely. And now we look to be picking up off that level and starting to turn higher. So and the fact that it's gone above 4,500 this morning is actually quite encouraging, because that takes it to a new high for the month to date. And to me, it looks like it's heading back up to about 4,800, possibly 5,000 as the next shorter term target, basically to go and revisit the previous highs. So I am long Ethereum at the moment for that reason, and quite happily long, and actually looking to add to that position now that it's showing to me that it's working out. I've been waiting for a break above 4,500 to add to the trade, and it's doing that this morning. So, they say add to your winners, cut your losers. I'll be adding. I have added a little bit this morning. I'll probably add a little bit more if it continues to show that it can sustainably hold above 4,500. And bigger picture, this looks good. In fact, now I've been saying to a lot of my clients that the cryptos that have actually been showing the better relative strength in the near term have actually been Ethereum and Solana. And those are the main ones that I follow. I mean, I know there are plenty of others out there, but I don't follow. But in terms of the big ones, it's Bitcoin, Ethereum, and Solana are the ones that I mainly follow. And Ethereum and Solana actually have been, on a relative basis, they've actually been stronger than Bitcoin. So if that theme continues, then you might actually find that those two continue to outperform.
I have a theory that I'd like you to poke holes at. So I have positions in Bitcoin, Ethereum, Solana, and XRP, and I've been dollar averaging into Ethereum and Solana, and it's just on the basis that their charts are looking positive. In my humble opinion, this is not in any way advice to anyone, but also my theory is that, you know, with the Fed going to cut, or that's what's indicated or suggested by markets, that liquidity is going to have to find a home.
Yeah, I think that's right. And I think that's what we're seeing. And it's what I alluded to earlier, that liquidity is very strong at the moment. And as a result, you're finding that money is flowing into all of these asset classes, and it seems to be bullish all over the place. Equities, cryptos, treasuries, all of these things are catching a bid. There's a lot of money looking to find a home. And whilst that's the case, I think the likes of these cryptos that you've mentioned, you know, should be beneficiaries of that.
Right. Thank you so much. I'm going to have to leave it there because we're coming right up to all sessions. We got tons of questions, which I'm going to put to Garth after the show. I see you, Jugger. I see you, Monkey Man, and everyone else. Do also slam the like and subscribe button if you really enjoyed this chat with, with all of us, because that's how we get all the splendid new stuff in the studio, and that's how we can also get Garth back on again with us. So good to have you, Garth. We have to get to all sessions now. We'll speak to you soon.
Thank you very much, Ange. Good to see you. Cheers.
Here we are, and we are off to races. Scotty is back with us. He's like a magician. He's like a ninja.
Just dropped the cloth and it appeared.
It's amazing stuff. So let's get us across the winners, because it's looking like cautiously higher at the moment. Let's have a look. Supermicro is top of the list at 4.5% higher there.
Yeah, so Adobe's up 3.4 after numbers. They were up a couple in the aftermarket. Nothing too exciting. That's a bit of a forgotten platform, really. I don't know what they can do to actually get people back interested. But again, that's decent. Again, as you were talking to Garth there, look, a lot of the crypto related or the higher beta names having the earlier move. Just having a little look a bit further down. A stock I did see mentioned actually on the overnight. So, you know, at the beginning of the week we were looking at Novo Nordisk quite a bit. So then I think if we can look at the relative performance of those. So we'll look at Novo's first. Had a bit of a jump up where unfortunately make the announcement that it's letting go 9,000 employees, which is unfortunately what happens when you're in a hyper growth phase. But contrast that with the chart of Eli Lilly, and that's actually been very quietly making a pretty good recovery. And you'll know how important a gap close is when we look at Eli Lilly.
Let's have a look at Eli, because I have a position in Eli in Ange's pension fund. Here we are.
So you can see it's had a lovely close of that big sell-off lower. And it's right on that. It's right on that level there. That from the August sell-off on the numbers that we can see the big red block down. So yeah, that's getting quite interesting, and it just goes to show even in companies where they look to be in the same predicament, that you can have the differing fortunes, especially where it's all about these weight loss drugs and so on. So I thought that was quite interesting. So yeah, a shout out to CNBC for mentioning that this morning. To be fair, I did have to steal it from there, but I think that's quite interesting. And like Garth was saying, if these things get back above, let's say 80 on the scale there on the right hand side, then all of a sudden that's getting quite interesting again. So yeah, that's certainly one to perhaps keep an eye on in that space. If you like looking at pharma names, I know they're always difficult to trade because of the headline risk around products, but I thought that was quite an interesting little flag outside of the things we've been talking about.
Yeah, but that's also why we look at charts, right? Because charts, we always say this, you know, because it is just a canvas on market behavior, and we always get told over and over again that these aren't just, you know, dots or lines or candles. These are actually, you know, people in the market. And the reason why we look at whole numbers as well is because, you know, that tends to be what people remember, and that's then trickles down to how they program their algos, right? And whole numbers, when things, we talk about inverse polarity a lot here as well, because there are a lot of measurements that go on for the algos to try and predict realistically how far or something might fall or rise. Speaking of which,
a lot of those predictions, though, as you know, are based off historical price patterns.
Exactly. And so that feeds into the markets have a memory. So speaking of memory, do you ever shop with using Ocado?
I do. You always know when the Ocado van is outside because our Labrador goes absolutely bananas because he knows there's normally something in there for him. So he lives a very privileged life. There's our family pet. So yeah, I always know he's there. Yeah, look, I still like the service. It's just unfortunately one of those ones where because of margins and the cost of running the business that they just have these phases of underperformance and outperformance. It's a stock that suddenly you can turn around and it's had a big move in both directions.
Yep. And that we see that today. So it's down more than 9% there, down more than 9.5% now as we speak. And that move coming very much so early this session. It's starting, those of you, if you did short this, well done you, but just be aware it is starting to turn.
Is there some sort of update out?
So this is why I'm bringing it up. If any of you know why Ocado is moving like this, I would like to hear it because I've been watching this since 8 o'clock, just in the corner of my eye. There is nothing at the moment that I can see that is behind this move. I mean, Ocado has, let's just show you the daily chart. It has had a sizable climb from July to around middle of August. But it looks as if it is making its way down to the levels last seen in July again. I'm going to try and draw that for you so you can see that a bit clearer. Anyone knows what's behind this move, please let me know because there's nothing on the wires or on the greater internet.
I can't believe Angie's radar, that all-seeing eye.
Omniscient. But my filters that I've built are not moving. I do not know why.
That must be almost the first. I can't.
Maybe you haven't been shopping enough for your dog treats. That's
perhaps not. If it was Friday the 13th today, I could attribute it to Angie's radar not quite functioning. But no, that's not even the case.
I tell you what else Angie's radar is picking up is Adobe. So we're just checking out Adobe again because this is one that we haven't yet covered, but the company did up its annual revenue and profit forecast. Remember, it's a bit like dating. It's not what the stock delivers for you now, it's what the stock delivers for you tomorrow, people. And it is up 3.4% and actually even more now, 3.7% because of that optimistic outlook. We talked about Warner Brothers earlier on.
Oh, yes.
That is moving, people. Trader friends, that is moving. Let's have a look.
Forget that.
Right, here we are. Take a look. That is the chart. But this is the, let's see, Warner Brothers is not one that is offered on all sessions. So keep a lookout at the cash open because my filters that does catch the pre-market is indicating 4.3% higher after jumping more than 28% in the last session. So if you're looking for one to catch at the cash open, this could be the one. Let's cross over to see what's happening with the losers on the all sessions. So just having a look at this. If you have built your own list, here's a handy hack. You can change a percentage. You learned about this, didn't you, Scotty?
I did.
And you said, Ange, why did it take you so many hours? Because I had to do this from scratch. And that is the only way at the moment. I've lobbied for this change, but that's the only way you can kind of filter it. Don't add it to the workspace because then your filter button disappears. But if you zoom in, you can.
Understood.
Yeah, you can filter it. There we are.
Tip of the day.
Tip of
the day.
Right, take us through the losers list.
So JD, that's just a little bit of a pause after a lot of the tech firms in Asia have had a very big run, particularly as we mentioned with ESAR, Alibaba, but yeah, a lot of the China tech names have been pushing indices to those highs. Best Buy, another one for the retail space. The retail space has been quite mixed actually, with some of the winners like Walmart, which have been hurt less from the tariffs. But again, that's just a pretty small move. Again, Chevron, very similar to the oils move that we saw across Europe and the UK this morning, just a little bit softer. eBay, Broadcom again on the, on the basis of the moves it's had this week, I think 40 bips lower is probably not even raising the eyebrows for anybody.
No.
But yeah, that's generally, I mean, just kind of scanning down there, look, you can see Walmart weaker, all names weaker. You can see the picture there across the sectors.
Let's have a quick look at the winners just before, because Bill is waiting in the wings.
Is it Bill time already?
Yeah, Bill Blain. Super Microcomputer is up 4.4%. We already covered Adobe, which is up as well. Tilray up 3.7%. Seems to be a good week for Tilray.
Amazing.
They're, if I remember correctly, related to cannabis, aren't they?
I will have to defer on that. Yeah. So just very quickly to finish with, as we were talking this morning, Ange, a bit of history, new history buffs now. A lot of people in London like to talk about the origins of the stock market. Jonathan's Coffee Shop in Sweetings Lane, which is actually very near to where we went for coffee last Friday, is reportedly the first exchange that opened in 1698. But I noticed this walking past the Guildhall this morning.
Interesting.
The Corporation of London.
Interesting, because like you, I also, learned the whole
Most people
coffee shop.
anecdotally.
Yeah.
I think the first index was supposedly in Holland for all the trading that the Dutch East India Company used to do. But yeah, 1282 to 1737 was a stocks market happening there. I'm sure if Rich was here, he'd most probably say I was there as a new joiner.
Yeah.
When that opened. But yeah, I thought that's a nice little way to finish.
He's aged very well, hasn't he, our Rich? He's aged very well.
He's aged incredibly well.
Guildhall also, interestingly enough, where I graduated. Let's have a look quickly. We've also got MicroStrategy up 1% there. Novo Nordisk, after really being pummeled, up 1% there. And some of the crypto-related names, Mara Holdings up 1% there.
Yeah, I've seen Monkey Man very quickly. A last one, because I know this is one close to our hearts. Just asking how Apple's doing. So for me, quite interesting. It's closed a big gap lower. For me, there, just you see on the right-hand side after the new product day, it's closed that gap. Apple does like to close gaps because it's one of the slower moving of the tech names. So it's indicated kind of neither here nor there. I think this is going to be one of those ones where the proof in the pudding is going to be in the eating. You've had the good news of the Google AI, Siri tie-up and so on. But again, the market for a product that is so sort of omnipresent in everyone's lives, you generally have to wait for sales data, new product take-ups. But I do like the fact it's closed that gap really quickly and then stopped, and it's trying to reverse. So for me, looking at that, I think that range it's in, that new zone it's in of the 225 up to 240, that looks like that should be the new range. And most probably, perhaps that's one for next week after some of the excitement subsides out of some of the other Mag 7s.
Yeah. Meanwhile, the hills are alive with the sound of money.
The bills are alive.
They're alive. Checking out Tesla before we go, because Tesla is up another 0.5%. There, friends. There we go. Off we go, revving higher. So it does show that Musk should learn how to keep quiet, maybe.
That's right.
Yeah, but on that note, we're going to have to love you and leave you, but don't go away, Scotty, because we are going to have a quick drink after this. But first, we've got to get Bill Blain on the show.
Excellent.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Let's do this. Hello, Pat Cash. So guys, I've always been known to be the fastest, the fittest, mentally the toughest, but the cash returns. That's something else. Watch and learn. Come on, Pat. Cash returns, come on. Hey guys, where are you going? You're not going to get better than cash returns.
Hey, welcome to Expert Edge with myself and Bill Blain from Windshift Capital Advisors. How are you, Blaney?
I am tickety-boo, and well, what a week it's been.
If you're talking about the excitement earlier on in the week when a bunch of us were kind of going Article 4, Article 5, that kind of excitement or personal excitement?
It's been a mix of stuff. I mean, it's been a really topsy-turvy week. I mean, it just feels there's so much distraction and noise going on, whether it's been the bombing of Qatar or the assassination of Charlie Kirk in the States. I mean, I happened to comment on that in a very mild form, saying I was concerned about the polarization that it's generated in the States. I put in a quote from Alistair Campbell about, unwise tweeting by some US commentators. And I have been deluged in trolling from American
You've been
leaders.
trolled?
Must be. Yeah, it's about 2:00 in the morning in the States. And
Oh,
I'm getting,
goodness.
what kind of lefty are you? I mean, all I'm saying is, my comment in the morning porridge this morning was all about what would a Farage government mean for the UK, but somehow that's upset the Americans. But it has been a fascinating week. And I know you were at the defense show this week.
I
now,
was.
that is something we should chat about, because
It changed my view. It changed my theory.
the world changed in terms of defense. I think it's pretty clear that Qatar bombings, Russian drone incursions into Europe, and Trump basically blubbering on it and doing very little means that the impetus for European defense stocks, to my mind, has got to be increasing.
But here's the thing, Bill, and if you missed it, I was on earlier on the show. I mean, speaking to so many people that I'm heading back there after today, by the way, because it's a 4-day show for those of you that are unaware of this. Happens only once every 2 years, so it's a great place to kind of gather the new music. Really underlining, I am not for war whatsoever. It is just something that is since time immemorial, humans have been scrapping, right? Let's face it.
Oh, yeah.
Let's be honest. Humans have been scrapping since we could throw rocks and before that. And so it's also a great place to understand the dynamics between different countries, where investment flows are heading. One of the key things that I got from speaking to many people there, and also just watching which delegation is bigger this year, is that you're right. No one seems to be talking about the incursions earlier this week. No one seems to be talking about, what this means for NATO, which suggests to me that this is a paradigm shift, right? But also, if you're interested in, I know that you went in on European stocks after the Trump results and the election as well, or election results were in. The whole mood music about, the spend already in place. So there's no more extra cash. There's no more extra cash right this moment to flow into European defense. To me, suggests that that's flowing elsewhere. And so I'm looking at, other regions. And I gather that you have something up your sleeve as well. You're developing some new fund. Tell us more.
No, I made the mistake.
I'm hearing
of
on the group, it's a very
to
small industry. It's a very small industry.
The beans. Oh, that's the last time I tell you about what I'm up to in my day job, Angeline. No, I mean, I take your point on board. I think you've got a very, very strong point that we have known that European defense was going to be a topic since the moment Trump won the election. Smart money piled in to European defense stocks. You just need to take a look at Rheinmetall, BAE, Leonardo, and some of the other names. And I absolutely get it that now we are all invested in Europe having to defend itself. So, yeah, what is the ongoing upside? Well, I thought your opening comment was very, very interesting. We're against war. Now, we've known since the days of Athenian democracy that the way to avoid war is to be ready to fight war. Be prepared, Boy Scout time. And that's where I believe the future of defence remains very pertinent to Europe, and why we will continue to see increasing defence to make Europe absolutely secure and to create a European defence structure that is going to replace the Americans, because I think we have to be absolutely brutally honest and prepare for the very strong likelihood that American troops are about to be withdrawn from the Baltics. So we need to have weapons in place. And that means constantly coming up with new things. Now, I'm thinking back to some of the great periods in British history. I'm thinking about, in the aftermath of the First World War, we thought that there was a massive peace dividend. Armies were descaled, investment into navies and the new Air Force concept dwindled immediately. And we saw money trying to be saved as much as possible. And it was only private money coming in that it was only private money coming in to support defense infrastructure and defense innovation spending that really kept things going. And there's a great story about a rather eccentric British lady called Lucy Houston. She had a succession of very rich husbands, and she was fascinated. She was a true patriot. And she saw that the RAF was going to have to pull out of something called the Schneider Trophy. And this was to build the fastest seaplane. And the actual races of these seaplanes took place just where I live, on the Solent, down opposite Southampton in the UK. And she actually funded the RAF to build the Supermarine SR6, which won this trophy 3 times in a row, and therefore Britain retained the Schneider Trophy. Now, that plane, funded with private money, went on to become the Spitfire.
Wow.
The weapon that effectively won Britain, the Battle of Britain. Well, that's what they say. It was actually the Hurricane, but the Spitfire is a damn fine looking plane, and whenever you see one pass, and whenever you hear one, it's incredible. Everyone's eyes go, wow.
I just saw one 3 weeks ago, actually, on my Perception kayak in the middle of the sea. So I was, it was the first time I watched it from the sea. It was incredible.
Yeah, so that's just a hint of something. And I'll tell you what, since I made the mistake of telling you something secret, one of the projects I'm working on, when we launch this new fund, which will be a hybrid fund looking at defence stocks with the aim of making sure that Europe is safe and secure. Then I'll come back and give you a full briefing on it. But in the meantime, I remain very much in long European defence stocks because I see that as the best way of ensuring we don't have a war in Europe. And you got to look at this, where we are in terms of geopolitics. One of the big things we've seen emerge this week is it's pretty clear that all Donald Trump's efforts to win a Nobel Prize by overnight peace in Ukraine and immediately solving Gaza are absolutely going nowhere. The Israelis have taken him for a ride. Russia has taken him for a ride. In Europe, we're the ones that are going to have to fund Ukraine, and that's fine. Ukraine is our responsibility, but it's also part of our business to make sure that we go with it.
So here's the thing, Bill. So even if Ukraine does achieve some sort of, treaty with Russia, they're still going to have to arm themselves. But the reason why my theory has changed slightly, I'm going to show you. You talked about Rheinmetall. Many of you on the show here heard me say that after the big leg up, I was taking money off the table because around sort of February, April time, it started getting quiet as to what was happening with European defense, and I was starting to think maybe a lot of the gains had already been baked in. You can see a bit of consolidation there from June as well. And some of you also then said, what are you then looking to dollar average into, just as I wait for more information? And I said, when in doubt, stay big. When in doubt, stay big. So BAE Systems is a titan in the European space. It also has its fingers in every pie. It had by far, always, every 2 years, the biggest stand, but the stand this year was on steroids. It was a double story stand. And we have seen this breakout as well. This is the daily chart there. And I've put that area of interest there. So BAE Systems, as you can see here, not suffering the same sort of summer lull that some of the Rheinmetalls did. Staying big, Northrop Grumman, that's another one. So this is on the US side, and as you can see, it also did not suffer much of that summer lull and has picked up. Pelican on the show asking whether I saw drones. Not only did I see drones yesterday, Pelican, I also looked at
I'll bet you did.
I did indeed. I'm going to see more today. There was one on the kinetic stand, and I said, what? Is this made out of polystyrene? And the answer is yes, because they're finding that polystyrene is able to evade some of the anti-drone type missiles, because it's, some of these missiles are programmed to seek heat or metals. But polystyrene, well, that's easy to make, right? But also, it's hard for anything magnetic to stick onto it or to actually find it. So that was really interesting. The other thing too that was interesting was on the drone front, Bill, tell me if I'm boring you to death, is that the tech for drones, it's moving so quickly. It's moving so quickly that, the MOD and all the other defense government bodies out there, having to think twice because, look, you're going to invest in something and then in 2-3 years' time, it's going to be out of date because Kinetic, which makes Dragon's Breath. Have you heard about Dragon's Breath? So this is an anti-drone, and I'm going to try and bring this up for you, Dragon's Breath, and it looks incredible.
Systems that can defend against drones are part of it. The other thing you got to look at in drones, not just drones themselves, but drone logistics systems, drone management systems, anything that makes drone offensives and defense even more effective. These are all the things that we're learning from the Ukraine war. And you know what? The Ukrainians have done a superb job of inventing and innovating quickly in that area. That's why they're leading this game. But now we're beginning to see some really interesting new ways of using drones and using logistics to keep them supplied, to mission them, to make them work. It's brilliant. And if you can develop something that protects against drones, then suddenly you make tanks effective on the battlefield again. So the Israelis are at the forefront of that.
Yeah.
It's a fascinating business,
It is
but there are
fascinating.
other things going on this week as well.
There are. Just very quickly, just want to wrap this up. So that is the thing I was telling you about. It's called Dragonfire laser, and it can take out something that is the size of I believe they said a pound coin a kilometer away. Just by targeting this laser at it. The deployment expected 2027, but it's already there on display, and it's not a prototype. Apparently they say that it works very well. So I managed to see one of them at the show. Right, loads of other things happening, Bill. Wanted to ask you as well. Your morning porridge. I had to kind of take a swig of coffee when I read it, because you have some strong thoughts, both sides of the pond. Which side do you want to start with, the US side or the UK side?
Well, I think we should let us not risk talking about America, lest the pair of us get accused of heinous crimes for saying something obvious and being accused of being left or rightish for doing so. The key themes that emerged for me this week are gold contingent, and the uncertainty created by events in Ukraine, in Poland, in Qatar, just confirms to me that we have ongoing stability and uncertainty. There is no sign of that being quickly resolved because the peace initiatives are going nowhere, so therefore gold remains top. The second big issue that I'm thinking about this week was that extraordinary rally in Oracle. Now, 2 weeks ago, you did a brilliant job ambushing me. You asked me a question about Oracle, and I was completely like, okay, well, I know they're trying to break into AI, but yeah, I'm sure they'll do very well, but they're a very old company, and they're trying to align their product to fuel drive data centers. Wow, 43% up in a single session on the back of a massive contract. And then we step back and say, let's take a look at that contract that they've done with Sam Altman at OpenAI, and the name that really matters, Masayoshi Son of SoftBank. And I came away from my thinking about that with my brain screaming, we work. Here's a company, OpenAI, that doesn't expect to be profitable till close to the end of this decade. And it's going to be paying somewhere in the region of, I think it comes out 60 billion per annum to Oracle for its data center services. That means it's going to have to borrow enormous amounts of money. That means Oracle, which is already very highly leveraged, something like 400% of its annual profit. That just tells me that is a deal that is priced for current perfection. If there was a rise in interest rates, or if we saw any kind of recession, or if we saw the AI bubble to burst, heaven forbid, this is not going to make any kind of sense whatsoever. And that got me thinking about the whole of the AI market, which brings me to Blain's library. Blain's library. And one of my summer purchases, which way do I need to put it the other? You see, this is what happens.
The AI
Con, it's called.
Who is it by? I'll bring it up.
Oh, it's by Emily M. Bender and Alex Hanna. The AI Con, How to Fight Big Tech's Hype and Create Future We Want. Now, it's just one of a whole series of things I've been reading about AI, but it came out with a brilliant quote buried in the thing, and that is, like all great tech barons, Sam Altman is just an ad man. And that really set me thinking, what is AI? Let's be brutally honest. AI is not intelligence. It is artificial, but it's not intelligence. It's just number crunching on the grand scale. And that has been enabled by the constant evolution of computer power. And that got me thinking. Over the last 2 years since the launch of ChatGPT, we have seen an extraordinary investment, an investment race to see who can plow the most money into AI, who can build the chips. It's fueled the 700% gains in NVIDIA. It's fueled all the expectations of enormous wealth through all the big tech firms. The top 10 tech firms have about doubled in value as a result of what we expect AI to do. But what if it is just hype? And that is what investment desks around the world are now beginning to consider. Where are the actual improvements that are promised? All we've actually seen are loads of people losing their jobs and being replaced by robotic AI-driven chat centers that are 100 times worse and are causing these companies to lose business, and they're desperately trying to rehire people. So that's my second big theme of the week. My third big theme has been the absolute shock and horror that we've seen in the US. Now, it is a tragedy when anyone is killed. And this was clearly an assassination of Charlie Kirk. We have no idea who it was. Personally, I doubt that President Trump is right by blaming the radical left. My own experience of meeting left-wing progressives is they cannot even order a cup of coffee without endless debate about the wokery of the coffee. And for them to organise a political assassination, I reckon, is so far beyond them, it's laughable. But the fact is, the USA is left even more polarised and divided. And heaven forbid that you comment on this, as I made the mistake of doing this morning, in a very simple line in my morning porridge where I quoted Alistair
you know
Campbell.
better than that.
Yes, I do, but I made the mistake because I didn't think that they were that touchy. They are. Yesterday, chatting to American friends, I just staggered at how significant this assassination of somebody those of us in Britain know probably very little about. And I think that just all adds to the instability and the uncertainty that we're seeing about investment into the USA. And it's that kind of investment that the Republicans are relying on to keep the economy functional. So that kind of all came together with my own thinking about what's going on in the UK. Now, I don't think it's any exaggeration to say that the Labour government is not exactly demonstrating unmatched political competency at the moment. I do think
at least
they're
they're hiding it very well if they are.
Yeah, they are hiding it very well. Now, the thing is, they lack party discipline, and no matter how well-intentioned Keir Starmer is, he's a lawyer. He's not a leader. There is no discipline. Where they do manage to get policy in place, it's immediately being blitzkrieged, and they don't own the media. They are not controlling the media. Whereas in contrast, Nigel Farage has got a very strong control over the media. All he has to do is say something outrageous about immigration, and the cameras immediately refocus on him. So we're all aware that Farage and Reform are currently leading the polls, I think 35% to Labour's 20%, which may even then be exaggerated because of Jeremy Corbyn's potential split. And it's pretty clear that at the moment, ceteris paribus, we are heading towards Reform becoming the next UK government, probably in 2029. So what I tried to do this morning in the UK, in the morning porridge, is say, what are the questions that Farage needs to answer, and what does he need to put in place in terms of a strong, well-disciplined party that will be able to address all the multiple problems that the UK faces. Now, my conclusion will surprise people and says in that it is possible.
Go on then. I like being surprised.
If
it is
he
possible.
Can get
you
the
think?
right people in place, if they can come up with competent policies, and remember, the market will start pricing this into the price of UK assets, including the critical gilts market, as we approach that election. And it's all going to be in the lap of Nigel Farage to make sure that he demonstrates competency and good politics.
And
that's
that is
a big
the
risk
key
for the
thing.
UK.
That is the key thing that you just said. Demonstrates competency. That there are many in know, and many that have been reported in the media as well, that wonder if Farage is that sort of person that likes being on the attack. But actually, it's a very different thing, isn't it, Bill, when you're actually doing the job? We all know that. It's very easy to criticize and to say this isn't going right. What do they know? They're not doing a good job. But it's another thing when the chicken comes home to roost and you have to make the tough decisions.
Yeah, it's easy to criticize. It's very difficult to do. So that's in the Morning Porridge, www.morningporridge.com this morning. And I'd be really interested to know what your viewers think about it. I've tried to be dispassionate about the whole thing. And, you know, to an extent that I seldom do, I have been. So I'd be very intrigued. Aside from that, though, I think my main focus at the moment is trying not to read the Twitter sphere for what's coming out of the States. It truly is scary, and that's why I sound maybe a little bit depressed this morning.
Oh, we don't want to depress Blainey. Let's take a look at, you know, the markets, because, you know, we are still seeing a lot of caution, but not as much as I expected. You know, we're still seeing, you know, the relative grind up still in place there. More green bars than red bars. This is the S&P 500. We had Garth Mackenzie on earlier talking about how, you know, wait a minute, we haven't got to the last 2 weeks of September just yet. And the slight hint of a stagflation, I can't speak anymore because it's been a week of no Rich, no Phil, and have to say this is a good point.
You're talked out. What we're about to say, Andrew, is that we've got
stagflation.
You know, the US numbers suggest that we've got a declining labour market, and even though the inflation numbers this week were really weak,
there you go,
they still may be disguising the real effects of tariffs hitting it. Well, you know, next week we're going to get that Fed ease. That will take some of the pressure off US consumers. But
where
it
are
is
you on?
not
You're 25 or
yet
50, Bill? 25 or 50?
I have a suspicion it's going to be 25, but I know that Trump this morning is pushing the U.S. Appeals Court to let him sack Governor Cook so that he can get his 50 basis point cut. But let's see what happens. I mean, there are so many things up in the air about the U.S. economy just now in terms of we don't really know where the numbers are going. This week's inflation numbers, as I said, were weaker. And you can run all kinds of narratives around it. But when you've got the stock market as strong as it is, when you're seeing earnings as high as they are, when you are still seeing this inflationary impetus unknown, in any normal world, no central bank would be considering easing. They'd be saying, let's just hang on and see what happens. We do not want to make this worse. And stagflation has gone from a very high threat at the start of the year to no threat in April, and it's suddenly back on the threat board again. And, you know, let's see where we go. Is it next week? Yes, it's next week.
It is next week. And also, you know, I was thinking about this a couple of weeks ago when I turned into a bear live on air here. Can you believe that?
Oh, that I'd like to see.
You're normally the bear. You're normally the bear. I was thinking, you know,
I'm never bearish.
Inflationary
big
times
pair of horns
of 2022. We've seen that, you know, in the US as well. The rising prices there. Some Americans say it was like the biggest rises they've ever seen, that they've ever remembered, right? But that coincided with a booming labor market there. You know, people still had jobs that underpin that inflation. You know, it's okay, we're still bringing income in and that kind of thing. But right now we're seeing, you know, cracks in the US labor market there. You know, no one's talking about those stimulus checks anymore. Remember when we were talking about stimulus checks all the time post-COVID? You know, all that's gone from the system. We still have this rising inflation situation, real feel on the ground. And now unemployment is ticking higher. So my thing is that,
well,
you know,
it's not really ticking higher. What's happening is the pace of employment is slowing. And the rate of inflation is slowing. But these two things could be due to all kinds of factors. The employment numbers, there may be a large element of the deportations that is reflected in that. At the end of the day, you know, the US economy is still very much functioning.
It is functioning.
A friend of
I
mine
agree.
was telling me he couldn't get a hotel in New York last week. You know, so there are, you know, rumors of its deaths are exaggerated.
My whole point, I completely agree. And I was going to get to that. My whole point is like, we're getting to a point where it's not going to take much to break the US economy. All things, you know, it's like a swan, right? It's like a swan. It's been doing that swan thing for a long time.
No, I'm going to do, if you're going to do that, I'm going to do that. Right, okay. I'm going to turn that around and say the US
You got to make it quick because we've got to wrap. Quick.
The US economy is fundamentally small because it is big and internalized. Compare that to the UK. We are a small, very, very crowded island. We need to trade with people. Our economy is very fragile. And that is the main difference between the two economies. And that's why we probably need to make a decision about going back to Europe because we can't rely on America anymore.
Yeah.
And on that bombshell.
And and on that note, I think Bill's off. We're going to quickly, get to the Pulsar Helium CEO interview because guess what? We've got some, questions at the end from Maturin, which I put to him, and also from Monkey Man. Thank you for sending that across. But Pulsar Helium, really interesting space. We seldom get to look at other commodities. Well, this is one that is very interesting. Stay tuned. Welcome to the show. We have a special treat for you because we cover all financial assets, commodities, but rarely do we get to talk about helium. And today, joining me to do just that is the CEO of Pulsar Helium, Thomas Abraham. James.
Very happy to be here.
So this is fascinating to have you and such a pleasure because rarely do we get someone from the helium space. How did you get into this field?
It wasn't by design, I can tell you that much. So I guess you could say it was somewhat fortuitous. It all began about 12 years ago now, and my background, I'm a geologist, and so I had a wonderful job actually, exploration geology, and I was working for a private company at that time over in Africa, and my job was find something of economic value. So I had complete free rein to make a discovery, and whilst over there, then came across helium. And it was tucked away, squirreled away in this book that I was reading, and with a colleague of mine, and then we found that Tanzania had this helium accumulation. So I went back to my employer and I said, "Well, mission accomplished. I found what you were looking for, a potentially economic deposit of helium." At which point they started laughing at me and said, "Happy gas," and that's and that look, they weren't really looking to get into the clown industry and so on. But thanks very much. And that was the answer I was actually quite hoping for, because then I could go off on my own and start to create my own helium company. And so then ultimately left and ended up here with Pulsar.
Now, Pulsar describes itself as a dedicated primary helium company. How does this set you apart from, rivals who treat helium as a byproduct?
Yeah, this is really the key differentiator, so the word primary. So at the moment, the helium industry, for the end user, so we're talking about big companies here, NVIDIA, Panasonic, SpaceX, the supply chain to them is quite, I use the word ugly, to be honest, because it's a byproduct. And so they then have these long-term take-or-pay contracts. And so every week they get their delivery of helium, should they need it or not. And so it does account for a lot of waste of helium, inflexibility for pricing, and then if one of those natural gas plants goes down, then there's no helium. So for us, it's all about helium being the primary economic driver, and with that, being able to offer some flexibility to the customer. You want helium now, you don't want helium now, to be able to be dynamic with supply for the first time.
Now, for those watching as well, thinking this sounds really interesting, right? Where else is helium used? Because most people just think helium balloons.
Yes.
Right? So take us through some of the industries, because this is such a fascinating topic. Space as well, and a lot of technology relies on helium.
Yes, it's. I'd say, well, firstly, party balloons. That makes up about 4% of market share, and is a frivolous waste of a very valuable commodity. So, but everything else is high tech. So the best way to think about helium is due to its unique properties. So what you want to keep really cold without it becoming a solid. So helium is a liquid at negative 269 degrees Celsius that is completely inert, so non-flammable, it doesn't react, doesn't rust, oxidize, and so on. And that's helium. So when you think about these high-tech applications, so cryogenics, effectively, what do you want to keep cold? So space launch, when you're using the fuel in a tank, you put helium in there to maintain pressure. For making semiconductors, you need helium. For MRI scanners, for the magnets to superconduct, you need helium. Cooling data centers now they're talking about as well. So all these new applications of requiring cryogenics, that's helium.
You just announced a 10-well drilling program as well, starting quite soon at Topaz. What sort of milestones should investors, if they take a position in your company, watch for between now and first production?
Pretty exciting time. So we've really ticked the boxes for, is the helium there at Topaz over in Minnesota? And yes, it is. And it appears to be the highest concentration in North America. It flows naturally to surface, not associated with water. So tick, tick. The next thing we need to do is this 10-well program, and that is the determining the volume. What's the size of the prize? And once we have that bit of information, and really that drill program, it starts in a couple of weeks at the end of September. It will go through to Q1 next year. And then at the culmination of that, so milestones, every few weeks there'll be a well completed. So that will be exciting. There'll be a resource update. And then we start to look at the economics for the first time. And so with a feasibility study coming out, we've got engineering works with Chart Industries who are looking to design the helium plant. So actually the news flow is going to be quite significant and dare I say it, quite good fun.
Take us through the process in relation to traditional mining. We've got many viewers and many clients who are invested in gold miners, for example. Is it dissimilar? Is it similar?
My background's actually hard rock, so I came from a gold and platinum and diamond background, and here I am in helium. But what I like about helium is actually the economics of it and also just the process. It's actually quite akin to precious metals, because with it you never get a ton of pure gold, unfortunately. That'd be nice. There's always some sort of waste material there, and we talk about grade. And helium's the same. You never get a pure helium gas. So it's always mixed with something else. And so for us, grade is king. And so you could think of it that way. But in terms of the process, it's actually a lot simpler than mining, because you don't need to drill, for some mines, you've got hundreds, if not 1,000 drill holes to determine the size of the resource. Whereas for helium, we're talking about a dozen or less to determine the size. And then when it comes to extraction, it's very quick. So the wells we've already drilled are set for production. They would then be put into a production facility that would be right there at the wellhead. And in terms of the overall capital costs, should we look at one of the, let's say, reach for the moon, the biggest helium plant in the world, you're still looking at a capital cost of less than $100 million, which when you compare it to hard rock mining is actually quite modest compared to the usual capital costs you see.
Now, I'm very curious about this mix that you talk about, Tom, because, I'm very, very fascinated by gold and gold miners. And there's a saying, right? If you find copper, you're likely to find gold. What is the mix when you find helium? What's in it, in that mixture that comes out? And can you sell a byproduct?
Yes, you can. So there's typically three mixtures that you see. So one is the current model is helium with natural gas. The next one is you've got helium with nitrogen, and nitrogen doesn't have any commercial value. And then you've got helium with carbon dioxide, and that's where we are, so with CO2. And I must admit, to be honest, when I first saw that we had high helium, which is fantastic, but then there was high CO2, I thought, jeepers, what are we going to do with that? And the first thought was, well, we've re-injected into the ground. And actually in the US, you get paid for doing that. So it's quite a neat little system there. But
nice, a bit of payback.
Exactly. So it's funny when you think about it. You extract something and get paid to put it back in the ground immediately. It's quite an unusual business model. But actually, in the United States, there's a big CO2 shortage, and where we are in Minnesota, it's really exacerbated because it's quite displaced from the CO2 production. So for us, we would be looking at a combined helium and CO2 for the economics.
You mentioned Minnesota. I believe you've got operations in Greenland. Is that right? Are you looking at any other places?
We're very happy with our portfolio, to be honest. And of course, I'm going to say this, but I think we do have the best helium portfolio out there. And the reason I stand by that is that these are new discoveries purposely for primary helium occurrences. We don't go out with old known systems that have been exhausted for natural gas and now try and get the last bit of helium out of it. That's not our business. And so really, I think Minnesota and Greenland are the places to be.
You also have just raised some 3.7 million pounds across the UK and Canada. How are you going to use these funds, and where exactly are you going to target these funds in the near term?
So this is really for the drill program at Topaz, so for drilling up to 10 wells. So the majority of the funds will go to that. Then we'll have the resource update, and then look at the economic studies as well. So that's really where the money's being deployed. It's all going into the ground in Minnesota.
We've also seen that University Banks not only boosted its equity stake to just under 5%, but also expressed an interest for more. Mm-hmm. How transformative is this financing package towards production?
I mean, it's such a wonderful vote of confidence, firstly, from a US banking institution to see the opportunity that Pulsar represents. So really, we're very pleased. And at the stage before, we've announced final investment decision to know that one of the key things, which is the money, is indeed available for us, is a huge de-risking for us. So look, we're incredibly pleased with it, and really, should we get to that point where we do transition towards production, then we could do it a lot faster than if we didn't have University Bank there. So we're very grateful.
Now, Tom, you're working really hard towards commercialization, right? Very soon, some 2027 is what I've seen. You've also extended an existing credit facility. What does the funding pipeline look like before 2027?
So with the money that we've raised recently, so £3.7 million, that really gets us through for the next 12 months. So we budgeted for that. And then the intention is to go across and switch to a debt model as quickly as possible. And one of the, quite selfishly, reasons for that is that I'm the third largest shareholder in the company. I would really like to, see if we can avoid any future dilutive events as well. So certainly very much looking after the shareholders' best interests there.
Nice, you've got skin in the game, as they say. The move as well to acquire quantum hydrogen effectively expands your Minnesota land package by a big number, actually, by around 1,000%. How does this affect your growth profile?
Really what it does is it consolidates our position in Minnesota. So we're the first mover there. We've made this wonderful discovery at Topaz, which is where our efforts are focused to realize its production potential. But at the same time, we have to capitalize on that first mover approach. And over the years that we've worked there, we've really come up with what is the Goldilocks zone for finding this helium. And this ground that quantum has, it really fits into that. And so the way that I see it is that this could provide future growth for the company. So we get Topaz online, and then to get additional feed potentially from this area that we've looking to acquire.
Now, we've got two questions from clients. Thank you for sending those in. One of them being momentum in land acquisitions and financing. Are we going to see more M&A, strategic partnerships in the coming months, Tom?
Well, it's been quite thick and fast recently, I must admit. So, look, I would say that we always keep our eyes open for opportunity. When I say opportunity, that is in the area of interest in Minnesota. So we may well see additional activity there. And then also we're very excited because the state of Minnesota itself is soon to be leasing state land as well. And we've certainly expressed our interest in that too.
One from Paul, all the way from Spain, actually. With helium prices surging and supply chain fragility made worse by global geopolitical tensions, he says, how is Pulsar Helium positioning itself to ensure stable, long-term supply contracts and mitigate the impact of market volatility for your end users, especially as major industries like chips and healthcare increasingly view helium, and rightly so, as a strategic resource?
Well, buenos dias. And look, I think that it's quite a long question there, but I think that really, it is very strategic. We're seeing that certainly with the technical applications, with a lot of talk about defense as well. Defense is ultimately a very large user of helium. And really, the whole reason why Pulsar exists is to get to the answers to this question, which is guaranteed security of supply. And this has been the issue for the past 2 decades, is that you've got these big defense companies or big AI companies, and if they want to increase their product, then they will need guaranteed certainty with helium, which quite frankly doesn't exist. But compared to their overall costs, it's a tiny fraction, but it's imperative that they have it. And so for us, what I'd like to see is meaningful production from Topaz in Minnesota, not just a small little blip, but actually a meaningful contribution to supply, but also to bring that stability. It really doesn't exist at the moment. It's a very fragile supply chain, only a few sources. And as a primary supplier, what we could also do is perhaps even create a spot market for helium, which doesn't exist. So to give that flexibility, and then hopefully all those concerns are a thing of the past.
And last but not least, I'm going to be devil's advocate. Helium is, of course, finite. So does that not mean that prices, are going to be on an upward trajectory because it's finite? But also, what is the next leg for Pulsar Helium? Because all commodities, as we know, Tom, it's a receding resource as opposed to growing resource.
Yeah, look, very much the case. And so helium is finite, and what we see actually is there's talk about companies going out and looking to mine the moon for helium. So I'd like to think that there's still plenty of opportunity here on Earth. So it's not quite that dire yet, but we've got Minnesota. It seems to be quite a sizable occurrence. And we know that from the subsurface work that we've conducted. We also know that there's been some drilling as far away as 150 kilometers from where we are, and they're still getting multiple % helium. So this looks like it could be quite large, which is great. So everyone could have, hopefully breathe a sigh of relief that we're not running out and we don't have to go into a different planet just yet.
Not just yet. Thank you so much for coming on, Tom. It's been such a pleasure. For all of you wanting to ask the CEO of Pulsar Helium any questions, send them across to ask@ig.com, which comes to me, and I'll put it in front of him. That was the wonderful Thomas Abraham James, CEO of Pulsar Helium.